The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome all to another excellent edition of the Power Trading Hour. This is David White, your humble host. And, of course, we just had the Fed come out with their minutes. We've got lots of action. Okay. We were down here at session lows. I guess actually made just a tick lower. No, now we're at session lows. 1639.72 on the S&P cash. We had almost no volume coming in, waiting for the minutes, turning about 1.7 billion shares right now. I think we had about 1.6 billion before the Fed came out 7 minutes ago. Volume starting to pick up, and we've got action pretty much everywhere. 10-year note up 6 pennies, which is what? 2.8, 2.9% or something. Nice spike in it if you're looking at the intraday. We've got a lot of action going on in the rest of them. Down 122 in the Dow. And the NASDAQ, what do I get on that here? Off 23. So a nice drop in that also. So we've got a market that is moving, and it is headed downtown. For those people in the den, they can sound their little submarine sounds. Dive, dive, dive. So anyway, what else do we got going on? Of course, this is just going through the earlier day low that came in at 1641 earlier in the day before it bounced. So we are making and have made a new low, but it's going to take a little while to digest. Reading it very quickly, what we have is a Fed that is not giving a clear message, and the market does not like uncertainty. You got about half the people saying we should wait, and about half the people saying, hey, it's time to go ahead and do it because we're having too many problems already. I suspect that at least half the people know that we are in a bubble caused by very easy monetary policy. The problem is the longer you're hooked on heroin or OxyContin, I don't know which one this is. I guess it's since it doesn't have a lot of signs of needle marks up and down your arm, I'm going to call it OxyContin. Eventually, you just need more and more and more of it as you get accustomed to it. And I think that they're at this point now where most people are saying it isn't the monetary policy that they are putting out, but the economic policy of the elected officials that's going to change things from now on. Kind of like a doctor saying, hey, I think you guys got a problem here. And it is going to be an issue for the rest of the day and probably weeks. I suspect that the next stop down, even if we don't get it today, probably tomorrow, is about 1620 on the S&P cash. And I think it'll be pretty plain. Interestingly enough, not seeing a lot of movement in gold so far, especially with the move in the dollar index. So I think a few of these things may sort out a little bit later. I was probably expecting a little bit more move in gold or a little less in gold. It's off about $7.50. And, we spiked down on the Dow, no big deal. And, of course, starting to bounce on the S&P here. So we'll wait for this to sort out. But starting to pick up, going through 1.8 billion shares on the consolidated tape. So the market is back in action, of course. I think if we are still in a downtrend by Friday, we could have a nice sell-off going into the weekend. But pretty sure that I think we're going to see 1620 fairly quickly over the next probably 24 hours, especially when those Asian markets open up. and at 9 or 10 o'clock tonight, I suspect we're going to see them react to a very lack of clarity from the Fed themselves. But I imagine the odds are probably 50-50 right now of tightening in September and probably 75-25 in October. And probably 90-20 by the end of the, or 90-20, 90-10 by the end of the year. So we will be looking at that. Of course, we are getting some action out here. I imagine that most Fed announcements, you get a bounce up or down, and then the opposite side, and then back to the other side yet again, and probably not a whole lot of change out here. Off 8 points on the S&P cash, so starting to slow down. One of the things I wanted to be looking at today is Apple. We've been talking about this one for a while. It looks like it's got very, very good resistance, and we're seeing it, especially in this pullback. A lot of these stocks that did have very significant downside moves and ABC moves down. What we did have was a market set up with different retracements. And when you have two decent Fibonacci retracement levels, you want to look between the 382 of one and the 618 of the other. If you're not familiar with confluence levels or new to TFNN or new to my show, there are several videos that show the art of timing the trade charts on TFNN. They're very short, 2, 3, 4 minutes, but you can find the one on expansions and retracements would be very useful here to go back in it. But we're basically the two moves will set up a area of a very strong resistance and or support. If you're coming back up in the example of Apple, that's exactly what we're looking at. We had a top indication that 514.56 would be the high, and we got to 413.74. So a very good projection out here of what would happen. It's nice when you don't have to depend on the actual confluence. It's nice when you have price and volume coming back together, and also like this, we're basically filling a gap. That gap came down on monstrous volume on the 24th of January of 52 million shares. That we got back in it with 18 million shares. A pretty good indication that the energy certainly isn't to the upside right now, and for the most part, we probably got a decent bounce in a downtrend, or at least one more chance to come back and test the low of April 19th. We got within $3 of that on June 28th, but the volume really didn't pull back. Maybe maybe just a tick. 21 million shares to 20 million shares. So not a whole lot there, but of course we got a little indication that the volume did kind of peter out. We were ready for a nice little bounce. We've gotten that bounce in Apple, and you're against that 514 at 56. I still wouldn't short Apple here, but it is one of those that is being operated very heavily by Carl Icahn. And, of course, they've got new products coming out over the next month and a half, but this may be as good as it gets for a while. They're going to have some product that comes out that really blows people's mind. And probably September, October would be the first time we see it. So I don't think you're going to pull back probably any more than 460 on this, but it could be in a trading range until those new products do ship. But look at 514 as above, and the next move would probably be right up to just under $600. There's a high at 594. But right now, I think the only thing you can bet on is a pullback and probably back into that 465 range, I would suspect, which is just a 382 retracement and a normal move up. Maybe if we get back up here and the volume even shrinks lighter, maybe those products aren't as good as people think. Maybe that would be the time to pull the trigger and the next move down. It's not uncommon to see a lot of these stocks after big moves to consolidate out for a while before they continue to move back down or back up. With all the destruction, you've got a lot of overhead people that are just waiting to get their money back. And I think Confluence is a good part of pointing exactly that out. So I have a question that end is 1624 on ES possible today? I think it is, but more likely tomorrow. I suspect that we're going to bounce around here for a little, and the bulls are going to come back and take their cases, and we're probably going to close probably around here, something like 1640, 1645, and then we're probably going to see the reaction tonight from those overseas markets, and that's going to tell us a lot. But that'd probably be 10 o'clock tonight. So Thursday, I'm looking for that 1620 range to be hit. So we will see. Other things of interest going on in the market. Toll Brothers came out with her earnings this morning, pretty much in line. Of course, these guys cater to a higher level clientele and a lot of jumbo loans, actually looking a little bit better than a lot of the other housing stocks. We'll get into them hopefully after the break. At the bottom of the hour, we know that we've got Andy Heck, my stalker, who's normally following me on Tuesdays and Thursdays on most of TFNN.com. And he's going to be calling in at 2:34. So if you need your little fix or a big fix of Andy Heck, hang on, and he'll be calling in at the bottom of the hour. Anyway, Toll Brothers, no big news out here, which doesn't give a lot of people in the housing market anything to hang their hat on. AEO did miss. And, of course, we're seeing a lot of feast and famine in this market in the clothes manufacturers. Now, what's interesting on this one is it's come back, like a lot of these stocks, to these very long-term gap levels. And this one, hopefully, if you don't are not watching in the Den or Tiger TV, you want to look at this one. It gapped up on fairly decent volume of 13.1 million shares on March 7th of 2012. It is now coming back and hitting those gaps. And that's why when you're always watching these, you want to see it. What it does have is a nice high volume high at 2394 that has remained tested on September 19th of 2012. So technically not a bad setup up here. We've got 10 million shares so far today, and again, we're going against that gap up that had 13 million shares. I think that's it. 13 million shares, and the next day it had 14.5 million shares. And we're kind of getting into that right now. But a little spinning top doji. But this thing is trying to hang out at that gap level right now. And then we'll have to see. 14.33 was the low today on AEO. So we've got to look at that. Another retailer that came out basically echoing the same sentiments that we've heard from Walmart. And that is that there are a lot of people making big ticket items. They're willing to go buy a car, a big screen television. But if it's if you can put it off, no big reason to go out and buy it now. So waffle irons and blenders, not selling incredibly well. Big screen television, cars, a little bit better. But people are spending their money on big things and not small things, and not apparel for the most part. And, of course, Target down on heavy volume. Looks like we're going to go down in the mid-64s on this one.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We come back, we're seeing a little bit movement back out. Looks like we're going to test the lows of the S&P cash here at 24 after the hour, 16 at 43, and volume is picking up, but on that little bounce there, it did kind of peter out a little bit, but we're at 1.9 billion shares on the consolidated stock exchange, so it will be interesting. So we've got Andy Hecht that's going to call in here in about 10 minutes, and I guess he's got something he wants to talk about. He's on vacation, and he will be. I guess he's got something to say. So we'll find out here. Both of us will find out, but I guess maybe he's looking at something and wanted to at least talk about it today. Of course, we were talking about Target when we last left, and of course pretty much the same kind of stuff that Walmart is saying, and as we look at that, what do we have out here? And that is this thing gapped up on earnings on the 4th of March. You had about a little over 12 million shares that day. We still haven't got into that gap. I suspect we will probably in the next couple of days. That the bottom of that gap is what the low of that day is 64.65. That's probably where we're going to start seeing support come in. We got awful close to that today. Today's low 65.14, but so we got maybe another buck down before this thing finds support. Like I said, we've got a lot of stocks out here that are starting to make signs, but you got a ton of stocks out here, and a handful of them making signs of a bottom are not enough. The stocks that I've been watching here lately have been stocks that even though they've made it with a lighter volume and made a lighter volume lows out here, they continue to break through. But there are a few others. What I'm looking at, especially in the semis out here, is a Taiwan Semiconductor. Actually not doing too badly today. These are rolled over a little bit before the general market, and I suspect that maybe these are going to bottom first and have their little bounce, and then we're probably going to get back to the Dow stocks will bounce later, but still think we have that 1620 level for the first test before we bounce significantly, and then maybe we'll bounce back up into this range. We notice that the 1645 is kind of acting as a pivot point, at least here today. So we might be, good when you watch these markets intraday to see exactly where the battle lines, at least intraday, are drawn. But the 1645 looks like an important number for a variety of reasons. But when we get back to Taiwan Semiconductor, it did hit a low on July 19th at $15.89. With 24 million shares. And, of course, it's not looking too bad out here. You certainly want a close back above 1589. But energy on this last leg down compared to the last leg up was higher, which suggests that you're going to go sideways. People ask a lot about the Power Law Vector Indicator number, and one of the things is it can give you some clues as to what's going to happen, even when you do make tests of lighter volume at lows. Just because it tests a low does not mean it's going to bounce. It could do something else like consolidate and go sideways. Normally when you do have higher energy on the way back down, the best thing you can hope for is consolidation. And in this case, we didn't get the kind of volume that a lot of people are looking for, but you've got 7, 6, 8, 5 million shares across a number of days as it's gone below. So what you want to see on this one is a close back into this trading range, and then any kind of sign of strength to see whether this thing is going to bounce. But Taiwan Semiconductor, of course, a good clue in the semiconductor space. Right now, they're probably, if you're not Intel, and building with Intel, you're probably having your products made by Taiwan Semiconductor or one other company that was taken private. Since they're private, you really don't have a good read on what they're doing behind the veil. But Taiwan Semiconductor is a public company. It gives you a good window into the soul of semiconductors. Like I said, this thing looks pretty good. Of course, what you want to be watching also is some of the big stocks like Intel. And I keep on thinking we've got 2150 back in this. It got close to on August 16th at 2189, but I think we've got a good chance to come back down here one more time. And 2150 area is a break below two highs, the March 8th high of 2013 that had 44 million shares, and the March 27th high of 2013 that had 45 million shares. So we are getting into this lighter volume, but 43 million shares says we're probably going to get tested one more time and at least go about halfway into those moves. Be back in a minute.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Bounce at its market, kind of interesting, 16.51 and a little bit of volume. But we'll have to see how the day shakes out as we get closer to the end of it. Andy Heck is on the line, and he's got something to say. And also did my new little puppy, Vixen, also had something to say. How you doing, Andy?
I'm good, David. How are you?
Fantastic.
Listen, I'm not on vacation this week. I'm off the air. They're replaying my option series because I'm teaching a professional ed course at the University of Colorado in Denver, and on markets and commodities and stuff. So unfortunately, the time coincided with my radio show. But I wanted to tell you a couple of things. First thing is that I actually wanted to pick your brain about crude oil.
Okay.
I want you to take a look at the crude oil chart, and I want you to tell me what you think.
What ETF are you playing on that?
Well, I'm looking.
The reason is
I'll be giving it away.
Yeah, the reason it is, I've got my trading system on another machine.
Oh,
that's
okay.
not
I'm
up on this one.
The SC right here.
What's that?
I'm looking at I'm looking at crude from the short side. Let me tell you what I'm seeing, and then maybe you can give me a little technical, what you think technically, because I wanted to pick your brain on this. Crude oil is in an interesting juncture right now. The price is pretty high. I mean, we were up at $105 this morning. We've dropped. We're 103.83, but we've been chopping around, between about 101 and just under, about 108 for the last couple of weeks. But what I've noticed is that the processing spreads, the crack spreads for gasoline and heating oil have dropped dramatically. In February, we had the gasoline crack spread was $44. Right now, it's trading at $14.50. That's like 70% lower. We had the heating oil crack spread in February trading at $40 plus. Right now, trading at $25.50. That's a drop of 37%. All right, that's telling me that on the fundamental side, demand for oil products is not as good as it was. Okay, that's number one. Number two, what's going on in the Middle East? I'm not so sure that should be affecting the price of crude oil so dramatically, because the issue is really in Egypt and Syria, neither a big oil producer. And finally, the open interest in the crude oil contract is now at 1.835 million contracts. That is historically high. And that's telling me that there's a lot of speculative longs in this market. So if we get a dip below 101, that could bring some very, very sharp selling into the market. That's what I'm seeing. But I wanted to see your read on the technical side.
Okay. As fair disclosure, I am short the ProShares Ultra Short Oil and Gas, the DUG. And we got into that around $59. You probably can't see our charts here at the moment, but one of the things I've been talking about is a lot of these charts that have been making their way downtown are setting up Fibonacci levels of confluence. And on at least the DUG, you've got a very, very nice confluence level, and I suspect that we're going to see the move down in oil coincide with a DUG hitting these numbers, and that is 64.75 to 65.19. So we've got about a 30-cent range in the DUG, and I suspect we're going to see the ETFs give us the signal for where crude bottoms and starts to bounce. But should have a very, very strong resistance at that level. And, of course, that'll be a support for the oil market. So we hit a high of 63.61 today on that. So we've got probably another buck to go here up, and they'll probably be pulling the trigger and selling it right about that confluence level. So
okay,
I think we're
so you have oil and nat gas in that one. So right now my kind of orientation to the market, I'm a little bit different than you. I'm pretty bearish on the crude based on the fundamentals I'm seeing, and I'm looking for a correction in the crude oil. But on the other hand, I kind of like natural gas. I like the action in the natural gas market. So, I'd be long the gas, short the oil, at the moment on spread. That's a trade that I have on for myself. But I just wanted to pick your brain on it and see what you were thinking.
I think we're going to do one or two things in the next few days. We're either going to gap over this, in which case we've got a huge move up. And on at least the DUG, your last high is at $70.06, and there's a little gap up there too. But I think we could get right back into that $68, $69 level. But to keep it, I'm going to need a nice gap over that $65 level on DUG, which will coincide to a lot of others. But I'm just following it at the moment.
Right.
But I think we've got that. But if it gets up there, today volume not all that exciting. like to see, even with oil rolling over, should see a little bit more volume in these ETFs. Part of that is the Fed announcement today. So I'm probably going to think that we're not going to get a clear signal on this until tomorrow. And I think, especially with the Fed minutes out, getting a little bit of bounce in the market, what's really going to be important is the way the international markets open up about 10 o'clock tonight.
Right. From just strictly a crude oil perspective, the open interest has me worried, and you know how these markets are, David. If there is some selling and we go down testing 101, the floodgates could open in the crude oil, and a lot of these stale longs could bail out short term, particularly in thin market conditions in August.
Well, we've seen that in gold where somebody came in and bought a huge amount, and I suspect that those people knew exactly that there were a lot of shorts in gold, and it was an easy route to take. Just go buy a bunch. We'll sell it back to them at 40 or 30, 50 bucks higher. And
exactly.
I think we could see the exact same thing in oil. Is that these markets have thinned out in August, and we could certainly see a lot of people get hammered just the same way. Someone coming in and selling a lot of oil because they know, like you said, there's a lot of people maybe on the wrong side of this. It may even be a short-lived thing, but may have a huge move out on the other side.
Exactly. We always called it running the stops.
You got it, and that's where, if we're going to run the stops, that's what I'm looking at. And Doug, we need to see that kind of volume come in those ETFs, long or short. But I just happen to have this one, so I know this. But
it's interesting. You mentioned gold and silver. Of course, I'm always watching those. And, right now I see gold markets kind of turning around, doing a little bit of a runner on this Fed announcement. It's kind of up on the day now, actually on the highs, which is about almost, $15 off the lows of the day. Silver's been pretty strong. But they seem to, they seem to be coming up against some resistance here. I took some profits in my service last week. We actually took a 204% profit on the SLV in my service last week on some stuff we bought, on some SLV we bought back at when silver was around $19. But up here the risk is higher. The risk is certainly higher up here for gold and silver.
It certainly is. You have anything else?
Nope. I just wanted to check in. If you have any questions for me, I mean, I'm always, me, whether I'm on the air or not, I'm always watching all these markets. That's
what do you think of copper going sideways here?
Look, copper traded for months between $3 and $3.20. We broke up, so the resistance was 323, 324. So the resistance becomes support now. Can we dip down to 324, 325? Take a look at that? Sure. But overall, I kind of like the copper market here, and I think that, it'll do well, between now and the end of the year. Copper is the bellwether, and if they're going to start tapering, the growth is good, copper should reflect that. If you believe the Chinese numbers, then copper should go higher. But, that's always the question. Do you believe the Chinese numbers?
Well, if I believe the Chinese number, I figured copper would be at 350.
Exactly, but copper at 330 says, there's a little, people don't necessarily buy in 100% here. But, if they keep coming out strong, and if we start tapering a little bit, and global growth looks good, copper is going to perform well. But technically, I think that as long as we hold, 323, 324, 325 on the downside, that's the new support. So the resistance has become support here. We break down there, then we go back to $3. But here, I'm looking, my upside target around 350. Not that crazy by the end of the year.
Well, that's interesting. I take my trading dogs to the dog park every weekend. One of the guys there is a academic here in Tampa at one of the colleges, and he's been writing about China for many years. The first time he went there was in the early 90s, and he had just gotten back. And very interesting outlook. He's gone every couple of years and continues to write academic papers about China. But I asked him what he thought, and he had gone through, while he was there, some of the ghost cities. Yeah. That they had, and he says, nobody's moving in them. He says they were the same. They were the same when he was there 2 years ago.
Whenever someone talks about the ghost cities, I always tell this story. So if you have time, I'll tell you a little brief story.
Okay.
First time I went to China, when I was working for Philip Brothers, was 1985. And a car picked me up at the airport and drove me on this brand new superhighway to Beijing. It took 10 minutes. There were no cars on the road except for the car that was taking me to the hotel. But there were bicycles all over this superhighway. I went back 10 years later, and it took 2.5 hours because that road, that superhighway, was chock-a-block with cars.
The other thing I thought was interesting was Tesla, the electric car company. In their earnings statement, I think about a week ago when I was listening, the one really important thing that I got out of it was someone asked him what they thought about selling the current car in China, and he says, we can't do it. He says the back seat isn't big enough, and that everybody that can afford an $80,000 car has a limo driver.
Right.
And he said, so unless you're selling a big car with a big back seat, you can't sell in China. I thought that was very telling out there that, I'm sure certainly they hire somebody that, probably costs them $5 or $10 a day for whatever their salary is to drive them everywhere. But I have a feeling that most of those guys are sitting in the back seat working on the 2-hour drive to and from work.
That's right. And China. Look, they're very big into building for future demand. And these ghost cities, I think until we can really evaluate that, we got to wait a decade to see if those cities fill up. So that doesn't really that's not a short-term indicator that there's ghost cities in China for me. But more, I want to see if they're stockpiling commodities. That's going to tell me something. And they had pretty good imports of copper into China over the last couple of months, and that bodes well for the price, certainly. Also, copper, there was a one-day strike at Escondida, so there's a little work, which is the big copper mine in Chile. There's some worries that the Indonesian copper mine, I think it's Grasberg, that's the second largest mine in the world, owned by Freeport-McMoRan or operated by them. The Indonesian government said that they might not want to export their natural resources. So, there might be some supply side things, coming up in the next couple of months, which could also fuel the price. So it's not just demand in copper right now. There's some things, on the horizon that are going on out there that could get that market going a little bit. So I'm more friendly to it than not, but, below 323, I would reconsider.
Are there any ways to play lithium in the futures markets?
Oh, not that I know of. Not at all.
So just straight to the miners for those right now.
I think you go straight to the miners, yeah. And the same thing for the rare earth metals and all. But you know what? In the future there will be, because, these commodities are all in demand and interesting. And, I'm so surprised they never put up a uranium contract, because, that's another one that's a very interesting type of thing to trade. But I believe that there'll be a rare. I think that within the next 10 years, we're going to see rare earth metals trading, because the rare earth metals, the uses in technology and the uses in terms of magnets for things like CAT scans and PET scans and medical devices. These things are as technology moves and we improve our technology. There's going to be more and more demand for these things. And these, those rare earth metals, 97% controlled by the Chinese. So,
yeah.
Interesting.
Who do you think is going to end up owning those contracts? Is there going to be something traded out of China, or is there enough appetite in the United States for one of these places to actually start putting on these contracts?
I think the CME will try to do it, because they're certainly trying to be the global exchange for all commodities. I think they'll try to do it. I think they'll have to do it in coordination with the Chinese, though. Look, the LME is owned by the Chinese now. Maybe they'll put it up on the LME.
Yeah, that's what I was wondering about. Anyway, I want to thank you for the call. We'll be back.
My pleasure. Thanks so much, David, and have a great show.
Be back in just a minute.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we've got a market that has bounced up. We're up 3 points on the S&P cash. Volume still is nothing that you certainly don't want this thing to continue with a light volume up any higher, or you're going to probably set up even further downside. But 1655 now, 2.15 billion shares on the consolidated New York Stock Exchange tape. So we could say that this is a lower volume move to the bottom. But at this point, you'd probably, now that we're on positive territory, you would expect to start seeing some volume come in on the move up. And 2.1 5 billion shares on the consolidated New York Stock Exchange is, I like that ad. Wimpy, wimpy, wimpy. Used to be the Glad Bag commercial, but we've got that. So seeing a few of these stocks try to come back into the trading range. IBM is one today, but you'd love to see at least a little interest in these stocks, and the volume is still low. I had a question in the den to take a look at Panera, PNRA. And, of course, I'm a big fan of their tomato basil bread. I'm not a big coffee fan, and they're expensive. Their sandwiches tend to be expensive. And I had a real cheapskate of a friend. We used to drive by this Panera when I lived up north, and I always told him that the devil must live in there because he would cringe when he went by. He was a real cheapskate, and he didn't like their very expensive sandwiches. I always thought it was kind of funny, actually. Anyway, there's a good chance that Panera set up an ABC down. It came back up and got into the gap down that happened on the 24th of last month. Got right back up to that gap and pretty much has filled it on, the 8th, and would project right back down to this huge gap. So a nice setup. Thanks for Mitch and Boston in the den showing it off. You got this huge gap, and just about every stock that I'm looking at out here certainly looks like it's coming back to these gaps to find the support level. Let me see. Let me redraw this again here just real quick. That's an ABC up. But actually it takes you, what? If we take a look at this, let me go back. A, B, and C. Okay, now we should zoom back out. Yeah, I mean, you've got this huge gap in Panera that's just begging to come back here and get tested. It gapped up on, the 25th of June, in 2012 on almost 3 million shares. Came back, got close to getting into that gap on February 21st of this year on 1.5 million shares. Then it had its nice rip up here, but this thing has had kind of a few issues. Let's take a look here. It's had a few issues out here, but certainly has the ability. Certainly, energy did come down and was strong, and would not be surprised to have it come right back to 150.75, which is a 1-to-1 ABC down, and right into the top of that huge high volume 3 million share day. So you certainly have a setup out here. I don't know what you were thinking about doing. Of course, if you wanted to think about this long, you do have a fairly decent high volume low out here at 165.55. That certainly needs to get tested. If you break it with higher volume, 150 is certainly in the cards. So very interesting. Then what else we're doing out here? 16 at 54.98, up 3 points on the S&P cash. Just a volume is nothing though, so you really got to be watching this market close. Again, I think we're probably going to see a gap down in the morning after these Asian markets once again open up. Anyway, I'll see you tomorrow. Same bat time, same bat channel. See you then.